A good beginning is a harbinger of positive outcomes. That's the word coming in from the Finance Ministry's monthly economic review. On the other hand, an RBI bulletin says that the Indian economy is slowly but surely recovering, but there is no room for complacency. Now, whether you're a knowledge worker or a businessman, an investor or a home buyer, it's always a good idea to understand the economic trajectory of the country. Today on the show, we will assess the state of Indian economy with hard facts and the latest numbers. But first, a quick report from my colleagues.
Indian economy is slowly but surely recovering. These are the comments which has been made in RBI's bulletin, which is released on monthly basis. The other comments which are made are that headline inflation has eased to below 5% first time since November, and it is a good sign for the economy. It further says that corporate earnings are beating the consensus expectations, the results which has been reported in Q4, and particularly banks and financial has shown a good performance, which is aided by robust credit growth.
There are downside risk to growth and upside risk to inflation, and these risk factors are partly due to external factors and partly coming from weather-related uncertainties. But the good thing is that which has been India's strength so far, that it's domestic demand.
And to speak on this, I'm joined now by Atul, Joshi, economist, founder and CEO of Oyster Capital, and Madhavi Arora, lead economist at Emkay Global. Welcome to both of you, and thank you so much for speaking with us this evening on India Tonight. Madhavi Arora, let me begin with your take. Now, the Finance Ministry outlook, or monthly outlook, I would say is optimistically cautious. It talks about the continuing risks because of what could happen in the global economy. It also includes weather and climate as a specific risk. And I found that very, very interesting. What would be your assessment?
So I agree with the Finman in terms of the fact that, there are limited levers as far as the recovery is concerned. At this point in time, of course, there isn't very certain risk to the growth trajectory that one can, pinpoint. But at the same time, I think the fact that you are going to be seeing, global drags in the form of geopolitics, in the form of general slowdown in the US economy, followed by the European economy, given the kind of rate hikes that they have seen. And plus, back home, we also have a risk of El Nino-led impact on agri output. That obviously, all of it combined could lead to, shrinking corporate profitability. And at the same time, RBI also has undertaken, a massive rate hike at a time when we weren't really seeing a massive growth recovery that we saw in the West. So I think all of that combined should weigh on output is what my sense is. So I think to that extent, I would agree with the cautious optimism that Finman is currently stating.
Atul, Joshi, the RBI also coming out with its assessment, and they also definitely optimistic in terms of the India story. But for the last several months, we've been seeing this theme where the India story looking better than the rest of the world. Can we be complacent about that? Because if you see the whole pack of quarterly reports, overall decent numbers, but there is a dampening in the outlook, isn't it?
Definitely, yes. So there are two parts to it. One is where the Indian situation within India and where there is a control of, let's say, the Indian factors, regulators, politicians, leaders, etc. And then there is an external factor, which is the geopolitical factor. Now, if we look at the second one first, the geopolitical factors are going to very heavily dampen the economic outlook of the advanced economies. Very, very specifically the US, Canada, and the European zone. Now, that's where a large part of our export also goes. We can already see a massive impact of this in the textile industry. The entire chain of textile industry, if we see, we find that there is a reduction in the EBITDA margins for, let's say, 25-26% in the last quarter of 21-22 to something like about 5 or 7%. So there's a massive erosion in the margins as far as the textile industry is concerned, which is a consumption industry. Now, if you look at the Indian part would have a massive effect on two counts. One, of course, is the nature, the climate, which my colleague has already spoken about. And I do believe that that's going to play a havoc this time, given the weather conditions and some of the things that we're already seeing. But the second part, which I see, my worry is coming from the bank credit growth. Though the headline numbers look very encouraging, when you dissect them, we find that a lot of it is coming actually from the personal loan growth. And a little part is coming from the loans that the banks give to NBFCs, which in turn again goes to, let's say, majority financing the individual loans. So the growth in the bank credit is not going to corporates, manufacturing or infrastructure sector. It's actually going to the individuals, which is actually getting leveraged, consumption demand or, survival, etc. So I don't see this as a very strong growth indicator. I think it's a weakness, and that's when I agree with you. We can't afford to be complacent about our growth projections. And I think over a period of next 1.5 quarters, we would start seeing comments from RBI to say that the growth would come down below 6%.
So that's a very interesting point, especially when you look at the details of that credit growth. If more and more people are taking personal loans, it's not corporates who are borrowing money. That means people are in distress. And that money is not necessarily going to create more wealth in the economy. It's going to just fulfill needs. What about the inflation side of things? I'm coming to Madhavi Arora on this, especially food inflation. We've seen a significant cooling off in the latest CPI print. And that has been consistent the last few months. There is an expectation of a bumper crop. Do you think that at least in the food inflation end, we are in a fairly good situation?
Believe that food inflation may not be that big a worry. So in the past also what we've seen is that even with an El Nino event happening, you had seen an output impact, but not necessarily an impact on inflation as such. Of course, some components of inflation like, milk inflation probably could remain a worry, in the summer at least. But if you look at other components like cereal prices, they are, starting to behave much better. Of course, the government intervention in the market also has helped. At the same time, if you look at, other components like oil seeds, pulses to some extent have also started to sort of correct. Seasonal impact of vegetables and food could remain a little bit patchy in the near term, which is again a summer behavior. But I think overall food inflation is likely to remain benign for the year. In fact, for the whole year, we are looking at overall inflation to actually come off to sub 5%, which is lower than RBI's current estimate of 5.2%. And my sense is that not only inflation should also, start easing, even though it will be a little sticky in the near term. I think the fact that the base effect will work well for the core inflation as well. And my sense is that it would also, on an average, hug around 5%. So I think it will be a more broad-based, slower inflationary trajectory that you're going to see in this year.
So inflation is, at least not going to trouble as much. That's what we hope. You saw 4.7% print in April, which was everyone was very happy about that. What about the consumption story? Let me come to Atul Joshi on that. Good bumper crops would mean better rural demand. Do you see the consumption story picking up?
Well, the question is the bumper crops. Do we expect it? So if you already see the cotton side, the entire cotton produce, whether it is in Gujarat or Rajasthan, the unseasonal rains have actually destroyed a pretty large part of the crop. Same goes for sugar. We already are deficit in running deficiency as far as rice is concerned. So, a bumper crop remains a question mark to my mind. Given the weather conditions, the predictions that we have internally is that it's going to be very difficult to see easing of prices, given that the output could be a very big question mark. Not just the late rains, but the distribution of the rains is going to be very difficult to predict. Sometimes you might have very heavy rains destroying the crops, or very less rains also destroying the crops. So I wouldn't go by the bumper crop season part of it, and consequently, the consumption would definitely suffer. And that's one of the reasons why I'm saying that the GDP growth forecast will have to taper down to below 6%.
let me just see that outlook. So Atul Joshi is saying that the GDP forecast will taper down, and perhaps you're already seeing heat wave conditions in a couple of parts of the country that will have a problem. What are the other factors, Atul, that you think can sort of hang low?
Export sector is one such sector which we are seeing beginning to see negative impact. The layoffs that are happening globally, that would have an impact, consequent impact on the Indian services sector as well. Third thing, if you look at the bank credit, as I mentioned already, it's not going to the productive side, not manufacturing, not infrastructure. So the heavy lifting of the entire manufacturing or the growth will have to be done by the central government and the state governments put together. Now, how much fiscal flexibility do they have remains a question mark. And in that situation, if we see that they are delaying the expenditure part and kind of trying to backload it rather than front load it, we are going to see a very serious impact on the consumption demand. Given that export is suffering, manufacturing, we are not seeing much of investments coming in. And the rural demand, I think, would be a little bit of an issue given the weather conditions. So consumption story not very strong at the moment.
Okay.
But yes, it is there compared to the world. We will be better off. That's where we can take a solace.
That's the overall, I think, name of the game right now. Relatively or better off. Madhavi, what would be your outlook for the rest of the year?
So I agree with Atul. We are also struggling to find, growth levers which could lead to India's secular growth story to, say a 6.5% to 7% plus trajectory. If we look at private consumption, I think until recently it was the urban consumption which was holding up, partly because of better urban wages, which I think will see correction in this year. On the other hand, rural wages have been on a negative year-on-year growth. If I look at the real rural wages, so I think there the weakness may still continue, and urban wages may again, not necessarily really help the consumption story. At the same time, private investment, I do not think that pre-election anybody would want to take a bet on greenfield investment, especially at a time when the world is also looking to probably, slow down in the next 6 to 9 months period, or even see a recession. So my sense is that both consumption and private investment are not going to be the growth levers. Export, of course, is a function of how the global world is, global growth is performing, which again would be something that probably would no longer be a growth support for our economy, which it was for a good 2-year period. So I think the only thing which is left is government again. And as we understand, the government is going to continue consolidating fiscal accounts to 5.9% of fiscal deficit for the current year, which currently means that they will also sort of contract their balance sheet to that extent. So I think assuming that the government would be able to take care of, or would probably be the next lever of growth, is, I think, too much of an expectation from the government. Even though we are in an election year, I do not think that we will be seeing government really spending out of its pocket to the extent that they can actually spur spur consumption or investment to any extent that could lead to a 6% plus growth. So for the year, we are looking at a 5.7% growth trajectory, and I think there's only a downside risk to that than upside risk.
Okay, so we're looking good comparatively, but yes, Atul, you want to come in?
Hey, just one point, just to support what Madhavi said, the personal loans growth we have seen, in the last 7-8 years, the maximum growth we have seen only in personal loans. And as the EMIs grow up, what is left with the individual's hands, surplus money, is reducing day by day. And that's why even their ability to consume is a question mark. That's the point which I wanted to make. Thank you.
All right. So state of the economy is looking up, but cautious optimism. Like the note from the finance ministry says that a good beginning is a harbinger of success, but let's not get complacent. All right, moving on to the other big stories of the day. RBI Governor